New Zealand house prices have fallen off a cliff. The average homeowner lost $671 a week over the last 4.5 years, and we're now just months away from the longest housing downturn in the last 60 years. But the real story isn't the whole country, it's one city, Auckland, because for a decade, Auckland has been the dog of the market, up only 2% a year, while small towns are running rings around it. So when a listener emailed me the question everyone's thinking about when do Auckland house prices finally come back, I went and ran the numbers and I found a town of just 6,000 people that just might overtake Auckland before it ever recovers.
Now, the reason I wanted to talk about this is because Matt, who's our listener of the show, emailed me in and he said, with you and Andrew being so bullish on Auckland's kind of medium term in terms of house prices going up, when might we finally see some sustained capital growth in Auckland? Because it's been 3 false starts and counting, and it's been a long time between martinis.
Maybe for you, not us. But yeah, Matt, I agree.
So what are your initial thoughts? Because I've got some data, right? But what are your initial thoughts on Matt's question?
Completely agree, Matt. It has felt like a bit of a grind in Auckland. Like not only property prices, but also the rental market's been really tough, or much tougher than it has been in the past. And a lot of my investors and myself, like when you buy a property and you kind of, you're topping up that property, it is a bit disheartening when you see the market go down or just even stay flat for a period of time, because you think, well, maybe the Auckland market's just screwed. Like I can understand how people would think that.
Well, I think the timing on Matt's question is pretty perfect, because we're actually about to hit a record that basically nobody wants. So I was on News Talk ZB the other day with Heather Duplessis-Allen, who I was quite scared to talk to her, because she's like, because when she rips into somebody and like gives them a hard time.
Oh, you thought you couldn't handle yourself against?
She's a tough woman, right? And I was like, oh gosh, hopefully this goes well. Anyway, we're great mates. We had a wonderful time having a wee chat. And we was talking about this specifically. And one thing that came up is that New Zealand's current housing downturn is on track to be the longest in modern history, because we're about 4.5 years in, and I think the longest on record, if we go back to like 1962, the longest was about 5 years. So depending on what happens over the next couple of months, we could even pass that. Of course, on the show previously, we've talked about how the average downturn is around 4.5 years. So yep, we're on average. This could go a little bit longer. And she actually wanted to know the same thing. At what point could Auckland house prices start going up? Now, I think the honest starting point is that Auckland's property prices have kind of been the dog of the New Zealand market for around about a decade, right?
Yeah, and we actually just released a new long-term capital growth calculator where you can actually see how fast house prices have gone up over whatever period of time you want to look at. So we normally say 10 years is a good length of time in Auckland. So you look at the last 10 years worth of growth in Auckland. The average growth rate for the last 10 years in Auckland is 1.9%.
So you buy a property 10 years ago.
Yeah.
And you hold it, and it goes up on average by 1.9% per year.
Compounding, right? But like that's bugger all, and inflation could be more than that.
I mean, inflation was way more than that. And the other thing that's interesting is that there are lots of other areas that have done much better than Auckland over the last 10 years. Now, I'm just going to scroll through all 67 areas, and we are going to just pick a random one, right? Here we go. I've chosen a random one. So what have I chosen? Because I'm blind, Andrew. Kaikoura.
Yeah.
So if we look at Kaikoura, if you bought 10 years ago, the market's up about 7.1, 7.2%.
Right. Can you imagine 10 years ago us saying, don't buy in Auckland, buy in Kaikoura, you'll get a much better return? Like people would think we're off our heads.
Well, I mean, does it surprise you that Auckland's had a bit of a rough time?
I mean, it doesn't, because when we think about the timing, like Auckland and Wellington have just been beaten by this like downturn. And so, Auckland, you're down like 20-something%. Wellington, you're down 30%. So now if you're taking a 10-year view over the last, 3, 4, 5 years, you've just basically been pulverized. And Auckland was a bit clunky before that anyway. So yes, the number is quite low, but it does make sense when you put into context that we are talking about averages and we've just had that downturn.
And I know we were just speaking on another video about, okay, Auckland's had it rough, but it doesn't always have it rough.
So if we look at, say, a 10-year view and we use a 6% growth rate, so we're using much higher than what it has been for the last 10 years, like 3 times as much, 86.3% of the time, if you take a 10-year view, Auckland has achieved 6% or greater compounding for that 10-year stretch. So again, not all the time, like still 14% of the time you didn't get that kind of result, but actually those odds, they're pretty good.
Well, I think the other thing is there's a real danger in thinking that if something is currently happening, it's just going to continue on forever, right? So some people could look at that and say, well, Auckland's 10-year average has been 1.9%. And so it's actually just going to continue to underperform forever. And it's quite interesting because if I look at like another small town that I bag on constantly, right?
Oh, well, you're not going to do it again, are you?
Well, which one do you think I'm going to talk about?
Yeah, Twizel, because actually I was out with some mortgage brokers last week.
Oh, were you?
And
I bagged Twizel so much.
One of them said, you need to stop bagging on Twizel. I was like, no.
I bet he owed the property at Twizel.
Yeah, of course he does. Yeah, and actually he done really well. And actually his business partner was like, nah, Twizel, Andrew's completely right about that.
Well, one other part of the country I bag on all the time is Kawerau. Now, Kawerau is a tiny little town of 6,000 people that is, I'm not even going to show you the results yet, Andrew. I'm going to make you wait with anticipation. A tiny little town of 6,000 people that is like completely surrounded by Whakatane district. It's in the Bay of Plenty, right? And it used to have like a paper mill that provided lots of jobs, recently closed down a couple of years ago. Now, if we look at Kawerau, over the last 10 years, property prices are up an average of 13.1%.
That's meant to, again, like
over 10 years.
If you look at that and you're like, okay, that seems like a better investment than Auckland, like you've got to be really careful with just looking at those kind of numbers and thinking that's the opportunity.
Well,
right?
if you think that, okay, this is just going to continue on. So Auckland's going up at 1.9%, Kawerau's going up at 13.1%. If we just take those numbers forward. Now, remember, the median sale price in Auckland is $1,010,000, like just a touch over $1 million. Kawerau's $406,000 at the moment, right? So if we run that forward, in 9 years, by 2035, less than a decade, the average Kawerau house will be worth more than the average Auckland house.
I'd be willing to bet that that's not going to be the case.
Well, it's probably not going to be the case that the small town of 6,000 people, sorry for anybody who lives in Kawerau, but it's nice to know you guys
don't have the internet.
I was just about to make that joke, Andrew. You've stolen it again. But it's nice to know they have Starlink now. But it's unlikely in my mind that we're going to see that rate continue where Kawerau keeps running ahead and then Auckland lags behind. What's more likely to happen is that Kawerau runs out of a bit of puff and Auckland speeds up again to a more normal rate of growth. And that's just all to say that effectively the last 10 years or whatever window you're looking at is not necessarily a good indicator of future growth. I mean, that is effectively what people mean when they say past performance is not the best indicator of future performance. And actually, there was another point that I thought here you go. You don't usually get a compliment out of me, but there was another point that you made in your recent private property newsletter about why Auckland had done particularly bad over the last 10 years. And I thought it was a reasonably well-made point for you. And the point you're effectively making is that the 10-year growth that any asset has depends on where you start measuring it. So if you start the clock of those 10 years at the very start of the boom and you end it at the top of a boom, you could have an amazing growth rate. Similarly, if you start it halfway through a boom and then finish it at the end of a downturn, there might be almost no growth within those 10 years. And so the amount of growth you look at depends on which period you look at. It's very similar to...
That's why often when you see developers quoting numbers around, historic growth rates, they can be quite
misleading,
selective around what duration they're going to use.
Well, there was actually a very interesting scenario as well. Just as we were coming out of COVID, so a year after COVID, remember how we went into lockdown, lots and lots of the share market just plunged in value, right? Then it rocketed back. And the FMA came out and gave a warning to, or a directive, I suppose, to all fund managers hey, we don't want you saying that your annual returns were 25%, but from March 2020 to March 2021, because if you started looking at April 2020 to April 2021, the average return might be, say, 7%. So the window you look at very much impacts what the return is. That's the whole reason we created this other calculator to say, hey, that's fine. Let's not look at one window. Let's look at 287 windows, right? Let's look at as many as we can and see what happens over those windows that you want to look at, in this case, 10 years. And one reason that Auckland has underperformed is that if you start the clock exactly 10 years ago, from 2012 to 2016, Auckland went on this massive boom run, right? House prices absolutely skyrocketed after the GFC. Then the Reserve Bank came out with new LVR restrictions. They made investors, or they said to investors, you've got to have a bigger deposit to buy a house in Auckland compared to buying a house anywhere else. So Auckland started petering out. All of the investors decided to buy elsewhere. And so you're starting the 10-year clock at the end of their boom, and you're finishing the clock at the end of a downturn. So, of course, it's going to underperform. Compare that to Christchurch, where the 10-year clock right now starts right before they go through this massive boom. House prices come a little bit back, but now they're reaching record highs again. And so when you start the 10-year clock or the 15-year clock really matters, which is why Auckland's done particularly bad. But I'm not sure if that will continue, because if we think about the next 10 years, we're not starting at the top of a boom. We're starting at the bottom of a downturn, and so the return is likely to be higher than the 1.9% that you've had over the last 10 years.
And I think for most investors, if you are looking at Auckland at the moment and you're thinking, oh God, what are the rates going to be in the future? Is the market just completely cooked there because there's so many more properties there now? There's been all this kind of conversation around poorly built townhouses, and maybe that's affected the market. Just remember that Auckland represents, 30% of the population?
Yeah, right? About a third.
Like, huge, right? And I think it's forecast to get to 40%. Like, as long as those forecasts are even within cooee of being correct, that's going to put a massive amount of pressure on the existing stock at the moment. And whilst it might not feel like there's a shortage today, 5 years from now, you'll be reading Auckland house prices skyrocketing, housing shortage, housing crisis, all those kind of things again. And we go through the whole cycle again.
I mean, how similar does this feel to previous cycles? You've probably been through this is probably your third market cycle, right? How similar does this feel to other market downturns that you have been through?
It's funny because I was just on a podcast the other day, not our podcast, someone else's podcast, talking about this. And this one's been a lot more, I wouldn't say relaxing for me, but I kind of go with the flow a lot more now. And because this one's been more extreme from a numbers perspective, I'm glad I've gone through that in the past, because I'm just kind of, this is what happens and just stay the course. Whereas someone that hadn't gone through that, who had just lost money and never experienced a good market, probably could give up a lot easier.
It's quite interesting. I was talking to a financial advisor who manages money for like mega millionaires, right? And we were talking about market cycles, and she's been in the game for, 30 plus years. And she said, I'm just so bored of market cycles now. People freak out, and then I tell them to just stay the course, and then it's going to go up and it rockets back. Now, I mean, I appreciated her attitude around that. Of course, different people have different tolerances for risk. But I found it somewhat reassuring in that, like, oh, cool. You're like, oh, well, we go through different market cycles.
Yeah, and I think because of those negative experiences, you can actually weather the storm a lot better mentally.
Now, if we come back to that question that Matt had, which is, but how long for house prices to recover? And we specifically look in Auckland. These are the numbers that I shared on News Talk ZB recently. So if we think about how long is it going to take for house prices to get back to where they were in about November 2021, Auckland's currently 23% below where it was way back in the day. So if you bought a property for $1 million back then, there is a chance it could be worth $770,000 today. So for house prices to get back to that $1 million, we need house prices to go up by about 30%. Now, I created what's called a Monte Carlo simulation. I've talked about this previously on the show, to understand the percentage chance that, like, if the market performs on average, like it has in the past, in terms of sometimes being up, sometimes being down, how long might it take to recover? I give it about a 33% chance that the market recovers within 3 years. So that's like not much of a chance. Not much of a chance that it recovers in 3 years, but a small chance. I give it a 50% chance that it recovers within 5 years. Okay, so 5 years to get an extra 30%. That sounds about what it's been in the past. And I give it a 75% chance that house prices recover within 11 years. So about a coin flip chance that the market recovers back to where it was in 5 years, a pretty good chance, a 3 and 4 chance that it happens within the decade, basically, is what I'm saying. I mean, if we think about that, that would mean that house prices get back to the peak, if we think about that 50-50 chance, by about 2031. I mean, how does that feel to you? What's your reaction to that?
I'd actually be surprised if it hadn't by that stage. I really do think it would. And if you are an investor who has just experienced a downturn in Auckland, like the financially smart thing to do, now it's subject to you needing to and being comfortable with this, is dollar cost average. If you go and buy a property today while it's discounted, you hopefully get that 30% rise on another property. Now, again, that's a very general statement. I don't want everyone to go out and do that without actually talking to a financial advisor, but that's what I'd be doing.
But look, I also don't want to oversell it, right? Because there is an honest caveat here in that there are some things that could mean that Auckland maybe doesn't get that big catch-up that we're expecting. So, I mean, what are some of the things that would make you not buy into that Auckland catch-up story?
I think the supply conversation, like there is a lot of talk, like I said before, around oversupply of townhouses. Now, we've covered this on the show before. I don't really buy into that word of oversupply because really that just becomes a pricing issue. But, there has been more availability than there had been in the past. And so that would be something that maybe people would be worried about. And then maybe just kind of issues around people's income. So now that we've got DTIs in place that limit the amount of money that you can borrow from the bank and it's kind of tied to your income, well, incomes aren't creeping up that quickly at the moment.
And I suppose that kind of bear case, the case that Auckland continues to underperform is that Auckland sped away after the GFC, right? And maybe this is just everyone catching up and it's just some comeuppance for the Auckland market rather than we usually talk about the Auckland market like a coiled spring. Okay, it hasn't gone yet. It's underperformed for a while. Perhaps this is just house prices coming back to more affordable levels and then we start to see that expansion again. But maybe that there is a case for that not to happen, right? But then on the other hand, I often think about Ireland as well. After about 2006, 2007, Ireland went through one of the largest house price downturns in the history of the world. It was like down over 50%, like nudging up towards 60%. Now, if you were sitting in Ireland, you'd think, oh my gosh, house prices are never going to ever recover. But today, like not that long after, I think it was about 10 years from the downturn for prices to get back to their peak. But today, house prices are higher than they were back in the peak in 2006. Now, that was like double the downturn that we've gone through. Over double the downturn we've been through.
Double the downturn. And it was brutal. Like I remember. In fact, I'm working with a client right now whose parents basically lost pretty much all of their money that was in some rental properties because of that downturn and not being able to weather the storm.
But I also take that as like oh wow, even in one of the frothiest markets that have ever happened in terms of Irish house prices, then the downturn, it's interesting to see, okay, eventually it recovers. There are some instances where massive house price downturns haven't recovered. I remember doing a video talking about the Japanese house price downturn, where actually house prices today have not recovered back to the point where they were in the like early to late 90s, but most of the time they do. And so that's kind of the bet that I'm willing to take.
So now you know why Auckland's been the dog of the New Zealand market for a decade and what the numbers actually say about when it might come back. But still, there's a question sitting underneath all of this that most people don't even ask, which is what actually happens to Auckland house prices when everyone keeps leaving the country? Well, that's exactly what I break down next. Click the video on screen and watch it now.